Welcome back to another video for HarborFinancialOnline.com. Today I'm going to be talking about how to calculate your federal income tax, and I'm going to talk about how to use our online estimator to get an idea of what your tax might be and what your refund might be coming up, because you can do a pretty good prediction of what your refund's going to be like and what you can expect coming your way. So I'm going to get the video started and we'll go through this together. Okay. So the first thing you need to do is you need to estimate how much you expect to earn this year in total to be able to figure out what your taxes might be and what your refund might be. What I usually recommend doing is getting a copy of last year's tax return to see how much you made and what your deductions were. Now your income this year could be different, but usually your deductions will be about the same. Things that could change that, it would be if your marital status changed, or if you purchased a home, or if you took some of the new tax breaks we had this year, like the first time home buyers credit, the energy credits, some of those. But if you're pretty much the same as last year, you can take last year's tax return, look at that, and make an estimate for this year, and get a really good idea of what your taxes are going to be. Our online calculator allows you to put in all of your expected income and deductions and give you a realistic prediction of what your taxes are going to be. And I'm going to take you to that calculator and show you how it works and show you how easy it is to use. So I'm going to take you to our site. This is HarborFinancialOnline.com, and we'll take you to the estimator here. So we have right here tax refund calculator. And we'll scroll down. And here's the calculator, estimate your refund. Click on the image, wait for it to load. So this is where you use the online calculator and how to determine what your federal taxes are going to be. So let's say you're married. I'm just going to give you a demo of how easy this is to use. We'll go with single. Head of household, no. Age, we'll put in your age. We'll just make up an age, say 35. We'll go to income. Now we'll just make up an amount real quick. We'll say $45,000. This would be your tax withholding, your federal withholding. This is what's withheld on your regular W-2 that you get from your employer. So on $45,000, normally you're going to have probably about 8 to 10% withheld. So we'll just put 10%. State withholding is usually going to be about 1 to 2%. So we'll just say $1,500. And then any unemployment, well, you could put that in if you had unemployment income. I'm not going to put that in right now. Other income, this is if you say had bank accounts with interest. Dividends, this will be from any of your investments that you get reported dividends. This will come to you on it's called a 1099-R. The place that you have the investment through will send you the stub, and you can put the amount in here. But again, look at last year's taxes and see what your dividends were, and if you're expecting the same, just put it in there. So we'll say 500. That may be more than most of you out there are getting, probably. Capital gains, these will be your investments, and we'll put in a capital gain of, say, 500. And losses, we'll say losses of 400. That's gonna offset, because you have, these are short-term and long-term gains from the sale of stocks normally, but it can be other things. You can check out some of my other videos cover capital gains long-term and short-term, and we'll explain to you how that works, so you can take a look at that. Pension distributions, if you're getting any retirement, we'll leave that for 0. So it covers all this. Miscellaneous income, alimony received, and we'll go to some others. Say business. Say you had a small business and you had some income from that. We'll put this year, since it was kind of a rough year for business, we'll put in a loss, just so you can see how that works. Actually, let's see here. Well, let's put in a gain here. We'll say 900. And you can see over here when I'm doing this what it's automatically calculating. Right now we have a balance due of $806, but it's breaking down everything that I put in there and automatically calculating and putting it into the tax bracket that you fall in. We haven't covered the deductions yet. That's just income. So once we put in the deductions, it's going to change it quite a bit. So home, say you had a house, mortgage interest payments. This will come to you from the lender, the amount of interest that you paid. So we'll put that in real quick. Let's say $2,000. Real estate taxes, let's say $3,000. Most likely the interest is going to be more, so I'm going to put that in there. You can see now that we're into our refund, $507 instantly. And just watch closely on the side as I put an amount in here. You can see how it automatically jumps up. So it's not, you don't have to wait long at all. It just automatically puts the changes in there. Now you have donations here. I'm not going to go through them all with you guys, but I just want to show you donations, retirement contributions. This will be like 401k. Other tax payments if you pay estimated payments. Educational cost, if you have tuition, loan interest on a student loan, and other deductions, miscellaneous, some smaller ones, which I cover in all my other videos. So I want to show you how that worked. Okay, so I'm going to go back to the video here and we'll get going on that again. So that's how to use our online calculator if you want to get an idea of what your refund might be for federal income tax. Again, look for deductions that you may have overlooked on last year's taxes, because you can always amend your returns. That's file a new return for that older return you already filed. So any changes you want to make, you can still resubmit that and probably get a bigger refund if you use some of the deductions we're talking about. Commonly overlooked deductions are moving expenses, casualty losses, fires, natural disasters, tax preparation fees, safety deposit box fees, child tax credit, and earned income credit. You can also lower your tax withholdings by increasing your reported exemptions with your employer. If you up the exemptions, you report that to your employer, they'll lower the amount of tax withholdings. This is normally if your refund ends up being too big each year, you're going to want less tax withheld from your check each pay period, because there's no reason to be overpaying. I recommend looking at Schedule A to see all the itemized deductions you can get. You can walk through that schedule and see exactly the deductions you might qualify for. There's first-time homebuyers credit of $8,000. If you started a business and had a loss, that's going to offset your income and lower your tax. Again, check out our estimator that I went through earlier. It's a great little tool that we have. If you have any questions regarding federal tax, send me an email, expert@harborfinancialonline.com, and I'll help you any way I can. And thank you for watching the videos, and hopefully you'll check out our website, harborfinancialonline.com. Thanks.